Welcome back to Bull Market Bully. Today we're diving deep into Rigetti Computing, one of the rising stars in the quantum computing space. Before we get started, don't forget to like, comment, and subscribe for more insight in stocks. Stick around till the end for a bonus tip that could be the game changer in deciding if this stock is the right move for you. Rigetti Computing is a pioneer in quantum computing, offering both hardware and software solutions. What sets them apart is their full-stack approach. They integrate quantum chips, cloud services, and developer tools to accelerate innovation. Their customers include businesses and researchers who need cutting-edge solutions for complex problems like financial modeling, AI, and optimization. As quantum computing evolves, Rigetti is positioned to be a game-changer in industries that demand massive computational power. Let's talk numbers. Rigetti reported $11.89 million in revenue over the last 12 months but is still operating at a loss, with a negative 729.44% operating margin. That's steep, but early-stage tech companies often face similar challenges as they invest heavily in R&D. On the bright side, they have $92.55 million in cash reserves compared to $22.49 million in debt, giving them financial runway. However, quarterly revenue is down 23.4% year-over-year, signaling some challenges in gaining market traction. Compared to competitors like IBM and IonQ, Rigetti's financials lag but reflect its status as a smaller, more focused player. The quantum computing market is set to explode, with estimates predicting it will reach $8.9 billion by 2028. Rigetti's main competitors include IBM, Google, and IonQ. IBM dominates with its extensive resources and established quantum platforms, while IonQ boasts superior qubit quality. Rigetti's competitive moat lies in its vertical integration, which allows seamless optimization of its quantum systems. This full-stack approach makes Rigetti uniquely positioned to capture niche opportunities in a rapidly growing market. Alright, let's dive into the future prospects of Rigetti Computing. Rigetti's growth hinges on several factors. First, they're aiming to scale their systems with more qubits and improved fidelity, which could unlock new applications. Second, they're targeting strategic partnerships to expand their customer base and geographic reach. However, challenges remain. Scaling quantum computing is capital-intensive and market adoption is still in its infancy. Regulatory and technological uncertainties could also pose hurdles. That said, Rigetti's commitment to innovation could help it overcome these barriers. Investment strategies. At its current price of $10.04, Rigetti's stock is volatile, with a 52-week range of 66 cents to $21.42. While it's not profitable yet, early-stage investors with a high risk tolerance might see potential. Valuation metrics like the price-to-sales ratio suggest that Rigetti is priced for growth, but caution is warranted. If the stock dips below $7, it might be a more attractive entry point for long-term investors. Final grade. Considering Rigetti's financials, growth potential, and competitive position, I'd give this stock a B-. It's promising, but the risks are significant. Only invest if you're prepared for a wild ride. Bonus tip. Here's your bonus tip. Rigetti recently achieved a major milestone with its 84-qubit Ankaa-3 system, boasting 99.5% 2-qubit gate fidelity. This is a huge step toward commercial viability, and puts them in a better position to attract enterprise customers. Keep an eye on upcoming announcements. They could serve as catalysts for the stock. That's it for today's breakdown. If you found this video helpful, hit that like button and drop a comment below. Don't forget to subscribe to Bull Market Bully for more actionable stock insights. Until next time, stay bullish.